Good morning. This is Dylan Jovine behind the markets. Happy Monday. Today's Monday, April 13th. And is NVIDIA worth $22 trillion? $22 trillion, or about $1,000 a share, $800 to $1,000 a share. Is it worth that much? Yes, according to a very super sophisticated financial modeling tool called the HOLT system, the UBS HOLT system, which is a tool only institutional investors get access to. And it is a serious tool. You learned about it on Wall Street. It wasn't owned by UBS when I owned a firm. But this is really never loved a stock as much as NVIDIA. And, really, you say, is NVIDIA shares worth 400% more than they're selling for today? And the whole system says yes. And what is really interesting is the whole system does something that real financial analysts spend a lot of time focused on. It's using a system, what we refer to as cash flow ROI, CFROI, cash flow return on investment. And what that does is it takes Buffett's owner earnings concept. Buffett always talked about, you want to look at owner earnings as a business owner, cash flow minus capital expenditures, and you come up with this owner earnings. The problem is, how do you really define capital spending or predict capital spending, really? Well, you have to understand something about the machinery that a company puts out there, their big capital spending, and you got to understand a bit about how long it takes for that machinery to degrade. You think about Intel. Let's say Intel builds a $10 billion plant in 2015. If it has to build another plant in 2026, it's going to cost a lot more. Another way to think about this, and this is something that I found very effective when I've lectured at colleges, is think about it this way. Imagine that you own a house that you rent out, and imagine that you have to replace the washer machine and the dryer every 7 to 10 years, depending upon usage, right? In 2015, let's say those cost $1,000. You get a top-down, up and bottom connected set, let's say cost $1,000. It would not cost $1,000 today. It would probably cost $1,400 for a replacement cost. So when you look at accounting statements distort, they're very distortive. And what CFROI tries to do is remove the depreciation away from the accounting statement. Because remember, the depreciation on the accounting statement is taking that $10 billion plant Intel built, and it's taking a little bit out, depreciating a little bit over time, okay? Or that washing machine, that washer dryer, and it's taking a little bit out, depreciating a little bit over time, but it doesn't match the replacement cost. And folks, when I tell you it is actually very difficult to do this exercise, this is why this is institutional grade research. I am serious. I have been working on a secret project for quite some time, really to improve this owner earnings concept. But the trick and the challenge for any of these models is to try to properly estimate replacement cost on property, plant, and equipment going forward. So these types of models tend to work better with high ROI, low asset-based companies. Anyway, Holt argues that basically NVIDIA, using their method, NVIDIA is actually worth 400% more than it is. It's unbelievable. And it really calculates the fact that NVIDIA's advantage is going to degrade over time. It really kind of says that. But it really, by the way, this has had a great success. It's had some great winners. It predicted fading growth for Yahoo, famously, Cisco, Sun Microsystems. This is during the dot-com bubble. It predicted these. So a lot of people love it, especially for software. They really have a really good head on software. Also, it predicted that a lot of these software firms, these SaaS model firms that have gotten their butts kicked, would be worth less, and it predicted that clearly. So these guys really have their finger on the pulse of tech, and they've come out and their model has said NVIDIA is worth 400% more, $22 trillion. That's a big number for investors to swallow. It's almost shocking because our economy is about $30 trillion. I mean, it's really insane. So that is what the Holt model is predicting. The counter argument for that in the real world, well, that is the real world, so I don't want to minimize that. But the counter argument is, look, everybody else has seen how much NVIDIA is making. Google's now selling chips, Amazon selling chips, ARM selling chips, everybody's selling chips, obviously AMD. And now all of these other companies that have watched NVIDIA make so much money selling chips, they're all going into the chip business, and they're going to really start chipping away at NVIDIA's dominance. So we will see how this all plays out. But I'll tell you what, if the Holt model is right, and it has a high batting average, NVIDIA right now is cheaper than it's been in a lot of years and is a screaming buy. Anyway, that's all I have for you today. Have a wonderful Monday. I'll see you tomorrow.